Hello, my name is Alex Baudin. If you're watching this video, it's probably because you've been solicited to invest some money in HQBroker and you're checking out if their legitimacy or maybe you already put some money in a trading account with them and you are now facing some issues getting it back. Now, I've personally invested lots of money with HQBroker and ran into all sorts of problems, which I will expose in these videos. I've been reading all sorts of warnings about this company, some even claiming that they're a total scam and that they are not operating out of Hong Kong at all, but in fact from a marketing company in the Philippines called BSD, changing name to GW. I can't verify these facts yet, but a trip to Hong Kong will soon get me sorted. But if in fact they outsource their marketing to the Philippines, I really couldn't care less. What matters to me is if my money is safe and if they are a reliable broker. I can't tell you if this company is a fraud or not. Really, if it is, it's well organized and it's hard to see. I can't imagine all these people going to work every night just to deal with upset people feeling robbed. There must be some happy stories as well. But what I can tell you from my experience is that your money is not safe with them. In these videos, I will go through some of the challenges I went through with them, resulting in the loss of all my money. Now, whether this money went in their pocket or not, I'll never be able to tell. Here's what I know about the company. HQBroker is a large international company with hundreds of employees. They have staff in outposts around the world in Australia, Cameroon, Brazil, Russia, Switzerland, and others I'm sure. Their headquarters is in Hong Kong, so they work at night while the stock market is open. They have staff operating in many languages. I have personally been dealing in French, so my broker is French, the financial analyst is French, the finance staff is French. The only time I had to talk in English was with the customer service and the technical service. The staff is composed of seemingly intelligent professionals. My broker was from the Ivory Coast and spoke in African French. Nice guy. I picture him as an honest guy working for a crooked organization. And in fact, in my opinion, most of the people working at HQBroker are just honest people doing their job day in and day out, but they work for an organization that is definitely not so clean. Kind of like working for a corrupt government. The official version is that the brokers working at HQBroker only work on commission, which means they make a profit only when you withdraw your profits. So in theory, the broker has no reasons to see you lose your money or not be able to withdraw. The commission rate is 5%. They do not have a salary for the company. Their job is to trade on the client's account with as little risk as possible to generate profits to their clients that they can withdraw. HQBroker makes a $10 commission on each trade that is opened and closed. I'm sure they also have a percentage commission just like the broker. Now, HQBroker uses a forex trading platform called MT4. In short, how it works is that HQBroker lets you borrow money for every trade that you make, so you can trade on larger volumes of shares than what you could afford with your money if you were to buy these shares. It's called leverage. The size of the trades that you can make are limited by the equity that is in your account, which should always cover the potential losses of your trades. You never actually buy any shares on this platform. You are merely borrowing money to rent the shares, and you assume the profits and losses with your equity as collateral. This is a margin trading account. Now, when you have money invested with HQBroker, you might get some calls to offer you investment opportunities called shares agreements. When the financial analysts are confident that a specific stock will drop or rise on the next market opening, they buy a whole lot of shares at the closing price and then they sell to their clients over the phone. When the market opens the next day, the clients find their trade in their account and they just have to stop it to gain the profits generated by the price difference from the market closes to the market open. To get access to these risk-free pre-market shares, as they call them, you need a minimum of money in your account, which can be an incentive that they use to make you drop a few extra $1,000 their way. Now let's talk about what happened to me with these share agreements. At first, I had about $10,000 invested with my HQBroker account. My broker, Emmanuel Gérard, and I got it to rise to $25,000 in a few weeks, which looked really promising to me. I then managed to withdraw $2,000, no questions asked. I was then offered a pre-market share agreement, but I needed to have a balance of $40,000. So I moved some extra cash into my account. I had then invested $36,000 and withdraw $2,000. I got the trade the next day and earned a profit of $3,000. I was stoked, and I told my broker I was ready to withdraw my profits. He then told me he had some VIP information that could get me a 30% profit. He advised me to take the trade and then withdraw the funds, leaving more money in the account following for more comfortable trading. He sent me a shares agreement, which guaranteed the 30% profit. I signed it and sent it back. This was the first mistake. Emmanuel opened a couple of trades and asked me not to touch them for 3 days. Now let's have a look at this share agreement here. Liquidity provider HQBroker. These are the actions, the stocks they wanted me to invest. This is me and my account. Here's the agreement. Liquidity provider agrees to provide through an HQBroker company for the client entry-exit point at the mentioned assets depending on the movement of each asset on March 2nd, 2018. Now, basically that tells me that the company is going to tell me when to open and when to close those trades. To obtain the above information mentioned, trading account must have 44,000 USD for a one-time transaction in the client's account. The agreement is subject under contract profit margin, minimum 30% return of investment for 3 business days. Contract cannot be terminated prematurely, which means I cannot close these trades. Otherwise, who knows? This agreement shall enter into force on the day of its signing by both parties. This agreement may not be terminated prematurely by both the client and by the liquidity provider. Otherwise, I don't know. But that's the agreement validation. Now, I did wait the 3 days after Emmanuel opened the trades. But on the 3rd day, everything went wrong. That morning, strangely, I had trouble logging onto my MT4 account. Then, I got a call from Kiel Laurent at the technical services telling me that my account was about to crash. I told him I could not log into it, and he advised me to try again, and this time it worked. When I looked at the trades open in there, the losses were at minus $36,000, and it kept going down until it hit my main limit, which caused a margin call in my account. Now, this is when your account's equity is not big enough to cover the losses in the trades. The platform blocks the trades until you add more money. In total panic, I contacted my broker, and he told me they were working on it. After a couple hours, the financial analyst, Mr. Dubois, called me to let me know I would need to transfer $13,000 to reopen the position. And it had to be done before the market closed, otherwise I would lose all my money, $44,000. So I scrambled $12,500 and they reopened my account with a balance of $32,500, meaning I had lost $24,000 in this trade since I started with a balance of $44,000 and deposited $12,500. Let's have a look at my platform here at some of the data that we can find in the MT4 platform. So you can see this is how I started. Probably most of you started with this much just to kind of try it out, and then okay, let's put 500 more just to see, you know, and then I could see a little bit bigger profits, and then oh, that's me kind of trying some stuff and losing some money, and just, you know, I had never been involved in the stock market at all. So I'm just doing some little trades to try and then lose some money and then gain a little bit back, and then, you know, eventually my broker convinces me that if I really want to make some money, I need to put in more money. So here we go. We put in $7,500 in there, and right away, you know, you can see some of these trades are a little bigger. You know, it's starting to be interesting, and I'm getting a hold of it. I start to be a little better at trading, and I can see some potential, but I'm really taking it lightly, and eventually I get a phone call and they tell me that they've made me $3,000. So that was Mr. Dubois. I really liked that voice. He was great, you know. So then he convinced me that, you know, there'd be like share agreements that I could get risk free for the next day. I just needed to have a bit bigger balance. So here's the money. I put in another $10,000. But really, it wasn't enough. I didn't quite have enough in my balance to get these shares agreements. So then they got me to put in a little bit more money. So there it is. I got, you know, a nice bonus of risk-free share of $1,700. So that was fun, you know. But then I was like, okay, I should, you know, think about withdrawing some money. So here I got $2,000 back. Oh, great! This works fantastic. You know, um, let's see if I can make more money here. Put in $10,000 to get involved into another risk-free share. So there we go. I got it here. Fantastic. You know. Then look at this here. What happens? I get a deposit for transaction, $3,000 of credit. They put some credit in my account. Now that just increased my equity. To me, it just makes me a little bit more capable of trading. I don't quite understand how credit work at that point, and I'll get into that into some other video in the next one actually. Oh, but there it is. There is the famous shares agreement made by Manuel, and how much money it got me. It lost me almost $25,000, and then immediately I had to put in $12,500 to reopen the position to avoid losing all the balance of $44,000. Now I've never had to play with this kind of money. A lot of it was credit, you know, like because I was stuck, you know, like I didn't want to lose all that 44,000, so I loaded up my credit here, you know, and just to reopen the position, and then I was like, okay, let's try to sort this out. You know, these guys are going to help me out. They know what they're doing. Now, what seemed odd to me in this whole margin call adventure was that I was unable to log into the MT4 platform at the same time as the technical services were monitoring it. Also, after reviewing the course of Amazon, I could see that in the MT4 platform, it dropped that morning from 1460 to 1402 just when I got the margin call, and then went back up to 1480. But after reviewing the data of the share price on that day, there was no mention anywhere on the markets of this share dropping so low. The technical services assured me it did, and they called it a spread that sometimes happened in the morning, and but I had to take their word for it. Also, another weird thing was that the price of the share at which the position was reopened said 1506, but the Amazon share never went that high. I mentioned it to the technical services, and they said it was a problem with the platform, and they called MT4 and fixed the platform in the next hour, and then that was all fine. So this led me wondering if the technical services were playing with the numbers of the platform. So let's have a closer look at these numbers here. The trades were open on the 1st of March, which was a Thursday, at this price. Let's just look at Amazon here. And they were closed on the 5th of March at these prices. Now, on that morning, I couldn't access my account, and when I finally got access to it, the Amazon stock was dropping incredibly low at 14.02, and that's where I got a margin call. But they reopened them when I send them money. They reopened them at this, which caused some losses. Okay. Now, if we take a look here at around the same dates, we can see that here, on the March 2nd, or maybe 1st, it got down to about 14.53. But here, where does it get below? Where do these numbers come from? And even if I look here on the Nasdaq, here on the 5th, this is, let's look at what these numbers mean. So we got open, high, low, close. Okay. Open, high, low, close on the 5th. Open, high, low, close. Where did it get below 1481? So you can clearly tell with these numbers that I've been set up, and that the technical services at HQBroker have been playing with the numbers of this platform to get me to have a margin call and then ask me for more money. You can see it here. It's quite obvious. But then I got in touch with their finance department and asked them what happened and why my position was not reopened in the profitable price. And they told me I did not send enough money to recover the full position, resulting in some losses. I then asked them if they were to honor the shares agreement I had signed with them that guaranteed 30% profit, and they just replied that this was an error of my broker, that if I wanted I could change broker, and that the stock market was full of risks. Bottom line, HQBroker did not honor the shares agreement. HQBroker does not honor its own contracts if things go wrong. So the first danger with HQBroker is the actual traders, the broker that is handling your account. While they might have no interest in losing your money, they definitely have interest for you to make some money. And they can expose your money to serious risks so they can make a quick buck without any risks for them. And HQBroker provides no safety net for their client against the risk taken by their brokers. Now, this is a serious warning that your money is not safe when the brokerage company is not willing to take responsibility for its commitment to its clients. So, in the light of these events, we can clearly understand that, one, you can't trust your broker because he might make you do some really risky moves. Second, you can't trust HQBroker, for they will not honor the shares agreement that they make you sign for. And then third, you can't trust the platform because the numbers clearly don't add up with the Nasdaq information. So HQBroker is playing with the platform to make you take some risks, and then in the fear of losing money, you end up dropping more money. This is just the beginning, folks. In other videos, I will expose other dangers of trading with HQBroker and show you why it's not a safe place for investing. HQBroker is a dangerous money monster. I've learned this the hard way, and I am committed to warning people against this company. I am putting a PayPal link at the bottom of this page to pay for advertising campaigns to warn people against investing their money in this business. Please contribute if you have found this video useful. Also, if you have testimonials or of your experience with HQBroker and would like to share, please do so in the comment box below and send me a link of your video so I can add it to this channel. Together, we can make a difference.